Stephen, your full year results are out today. Are they in line with your expectations?
2014 was a really important year for RSA. So I think what I would say about the results that we published today is, firstly, we're very pleased with them. We think that the company has come a long way in a year. We're also sober about it. There are important difficulties that we have had to get over, and some ahead of us. But we're on course. The three big headlines, of course, financially are that we've returned resoundingly to profit, from 300 million of losses to 300 million or so of pre-tax profits. We're starting our dividend again, which we aimed to do. The restructuring program that has strengthened our balance sheet so well is going very well. And I think that the operational performance, which is the crucial next step, the ship has begun to turn there also. And so we look forward to the future with a measure of confidence and of course, an understanding of what's yet ahead of us.
But a year ago, you set out a business plan. Are you making progress against that specifically?
The things we can control around our business plan so far have gone better than we expected. And obviously, there's a luck element to that. There's some hard work, hopefully some skill on behalf of my colleagues. There are some headwinds. Foreign exchange, interest rates, these affect international companies like us. We're not alone in that respect. And all cleanups, in my experience, end up costing you a bit more than you hoped they would. But I think we can overcome those headwinds. I think the company is inherently strong. We've demonstrated that, and I'm confident that we can execute to the performance standards that we set out in the beginning.
Today, you're setting out some fairly ambitious cost targets. How do you intend to achieve those, and how will we be able to track that performance?
The cost savings that we've set out, which were increased in today's announcement, we've set out higher targets for 2016 and higher targets again for 2017. These are, of course, necessary. In today's world, we're not the only company. Customers need better value products. It's price competitive. There isn't a whole lot of growth around, and so all companies need to cut their costs, and especially ones like RSA, where we let our costs get a little bit away from us in past years relative to the best people we compete against. So we need to do this. I think that the cost savings are doable, but of course there's a real human story behind all cost savings. These are not just numbers. It takes struggle to do it. It has human impacts, and we need to do it at the same time as competing in a sophisticated market, as making our customers happier, more satisfied with what we do, moving with the times. So we know how to do this. We intend to do it. Plenty of other companies have done it, but of course one can't dismiss it too easily.
There are also some headwinds facing the business. I mean, what are those challenges as you see them, and how do you propose to mitigate them?
There are two kinds of headwinds for a company in our situation. There are what I'll call the self-inflicted ones, which is why the company needs a turnaround in the first place. And those are, of course, a challenge to get over because they were built up, or the weaknesses we're correcting were built up over years. But we know how to do that, and we're well underway to doing that. Then there are headwinds that impact everyone in our industry, in the economic climate we face. Insurance companies suffer when interest rates fall, as they have been doing. International companies suffer when sterling is strong against key markets, as is the case with us. And like everywhere, we need to give our customers a better deal. People are trying to take our customers from us, and vice versa. So it's competitive. There are economic challenges. There are homemade challenges. And against all of those, we have some actions, and we hope we can make headway nonetheless. I'm confident this company is at heart a good one, and we will bring its strengths out and perform much better than before.
You're reintroducing the payment of a dividend. That is good news for investors, but what can they expect going forward, and will dividends increase over time?
We understand totally that dividends are a very important bit, especially of insurance company investment. Insurance companies tend not to be very fast growth beasts. We ought to be able to generate cash, and that cash ought to be returnable to shareholders in the form of dividends, which is why it was a priority of mine to restart them as quickly as we have done. But of course, in the end, you can only pay dividends out of sustainable, high-quality profits on a high-quality business and capital base. So our first priority is to fix the business capital base, to increase the profitability of the business, and out of that, I'm confident we can pay good dividends in the future.
So what can we expect from RSA in 2015? Have you really turned the corner? Are the troubles now behind you?
I hope that every time we report, we'll say, you know what, we've just done what we told you we would do. It's gone hopefully a bit better than we thought, but there'll be ups and downs, there always are. Inevitably, we're only in the second year of the turnaround, coming into it in 2015, so there'll probably be a bit more excitement than in steady state. But I hope that what we will be doing is executing to the plan we've set out, and that's certainly our intention.
I mean, you've also described RSA as a great business with real potential. I mean, what opportunities are there now for the business to grow and to really exceed expectation?
You know, the most important thing we have to do is to secure our base. And indeed, one of the problems that companies encounter that go wrong is typically the base has been neglected in favor of more exciting adventures. And so we need to look after our existing customers, the many tens of millions all around the world, do it really well so they're really happy with what we do. And we have to look after our shareholders by producing that into stable, high-quality profits. And before we've got those two nailed, I'm not interested in new adventures for this company. Of course, the world moves on. And so while nailing those two key tasks, we have to advance to meet our customers' expectations. We have to get better in all digital matters. We get more sophisticated in offering insurance for cyber risks or telematics for more sophisticated driving risk assessment. So we're always moving on, but the adventures are not for today's agenda. Today's agenda is doing a great job for the people who depend on us today, our customers and our shareholders.
And when will you know that you've achieved what you want to do here?
I never personalise this. So as far as I'm concerned, if the company is recognised as having comprehensively put past weaknesses behind it and is on a path to realising its potential, which I think is a good potential within the context of our industry, I'll take huge satisfaction out of that. It's something that 19,000 of us are all engaged in together, and we're all clear that, if you like, that is the outcome, that's the report card. It's a report card that will take some time to be measured, but that's the path we're on.
Stephen, thank you.
Thank you.